What's going on? What's going on? It's your boy Levon Stewart, founder, CEO of Vonnie FX, and welcome to another episode of Take Profit Tuesdays. And as always, guys, as we like to start each and every single video, guys, if you're not a part of the financial markets, if you are new to this, if you don't have any experience, if this is something you're very, very interested in to partake in, at least by yourself, unless you have a very significant amount of money, at least significant to you, please seek out your local advisor. Please don't do what I'm doing. Just find someone who's licensed, who's regulated. Find someone who can money manager. They used to call them back in the day. I think even still now. Like a Charles Schwab's or not to because they're not sponsoring this video. So, any local advisor, you could literally type in Google financial advisors near me, and you'll probably drop a list on like 5,000 different advisors. And guess what, guys? Those advisors, they will take your money, and guess what they'll do your money? They'll make you a good, decent return. Relatively, I would say at market, or probably a little bit better. There might be those exceptions or whatnot, but hey, guess what? That money you're giving him, he's gonna use that to help pay his bills. Manage his own life, his or her lifestyle, and do what they gotta do. So now, when it comes to here, we like to, what I call, teach those how to understand the four pillars of investing, right? I almost used to call it doing anything that you do in life. It's just practicing these concepts of, one, capital, two, psychology, three, risk management, and last one, the strategy. So, before I get to today's video, 1 second, let me do something. All right, we're back. So I just want to say first and foremost, I know it's been 2 to 3 weeks since I posted a video, and I'll be transparent with you guys. I had a vacation. Vacations don't know in the last couple weeks, but anyways, a couple of things I want to do in line before I actually went, so I wasn't able to actually, post videos. But whatever, right? You guys should have been watching the multiple views I had already. Used what I used in these past recent videos, getting to almost a better price than me. You guys should have been coming back to me telling me, Lee, I got this amount of money, Lee. I just jumped into a very good position, almost better than yours, Lee. Thanks you for the help. Those are what you should be doing. So, and again, guys, I don't teach this just so you could copy exactly what I'm doing. Because again, guys, if that's what you want to do, go to a financial advisor. Do what you gotta do with that. But I want to teach you guys at least the basics. Now if you want to learn more one-on-one coaching, more personal time, kind of tinker strategy that better helps you, please message me on the DMs. You can reach me also at stewart.levin@gmail.com. I'll be try to reach you. If I don't get it, send another one. And yeah, reach out to me. We'll set something up. If you're interested in crypto account management, let me know. I'm also the owner of that as well. We have a cold wallet, so we're gonna store your coins off the exchanges and keep them protected. For those gains. And crypto's actually a good place right now. Maybe I might do that a little bit more videos. But again, if that's what you also want available, you have to message me on the email so we can set something up. I could teach you a little bit more about investing in what we do almost every single week. S&P 500 or cryptocurrencies. So with that being said, let's jump into today's video. So now that I'm back, we kind of reached a very interesting point, and to be honest, I'm actually very happy that we had a good decent rally, right? And as expected, a sell-off, right? I know a couple cryptocurrencies that I invested in. I was able to exit out and profit before it took a dip. And with that, guys, is what I'm going to teach you. And that's why it's also very important to understand that in this game, it's not almost always about the short-term wins. It's about the long-term strategy, the long-term psychology, the mindset, how you're able to actually, see what's going on and kind of tinker your strategy, and that's okay. Say to yourself, okay, I have this amount of money that I want to put aside and to invest. Right, I have $500 right now. I want to divvy it up X, Y, Z, and the third. I want to put into these different markets, and I want to see what it wants to do. And if your goal is to, let's say, double it, and let's say a short amount of time, I'll tell you what, that's a risky. That's almost 1,000% risky method, strategy, and weak psychology to have, especially with the capital that you have. Um, Now, if you want to double that $500, let's say in like 2 to 5 years, that hey, it might not reach to that double amount, but I'll tell you what, it could reach to 900, 800, almost 700. Definitely 600. So I just want to let you guys know that the better your strategy is, the better your psychology is, and all these different things you do, ultimately will increase your profitability at the end of the line. So I do want to talk about this what's going on with S&P right now. I'm gonna be honest. I'm definitely thinking about doing a buy position. Probably this Friday when the market closes. And the reason why, because if you guys see this trend line coming down, and it's hit it multiple times, right? Came down, rallied up, came down, rallied up, came down, rallied up. And I told you weeks on weeks on weeks that, guys, let's go to weekly just to see so you guys can see a little bit better. Guys, support the stream. Hit me on the Cash App. It's gonna be my full name. Levon Stewart. We're still working on the studio as far as the streams. I know this is gonna be a premiere, so just be patient with me, guys. Things are gonna take time, not ASAP. But anyways, if you could ignore, let me see if I could. All right, perfect. So I just hit my drawings I did, but as you can see that right now on the weekly. So again on the weekly. On the weekly, that we're seeing each candles on the weekly, that we, as we said before, when you have your time frames, and again, if you haven't seen my video on time frames, and again, if you want to talk about more details, that when you trade on higher time frames, we have more structure, more stronger, support and resistance, more stronger trend lines, more stronger everything. Just everything across the board is just stronger. So we said before that right now S&P is in a consolidation zone, right? It's going up, down, very tight zone. It's not taking a big tank, and if it was taking a tank, it's gonna hit a support line. So we talked about the last zone of support was probably like right around right here, right? Right around right here. This is a key support zone because again, price has been reacting to that zone multiple times. It's actually trying to climb from that. And the next support zone I'm going to look at is like right around right here, right? Kind of like the high we touched. Most recent high, right? Right here. So once you break this one, the next one we can look at is probably this one or even this one, right? And what I'm saying to you guys now is that this is probably almost the best time to buy, and for multiple reasons than none. So, again, guys, I'm not a financial advisor. Do as you wish. It's your money. But I was able to get into several, relatively good buy positions, and I always say before, I'm not even gonna tell you when I'm gonna buy. A lot of times gonna jump on and see when I buy. Maybe that's a good time to buy because it gives you guys a good amount of time. I think 5 days is good enough. The market's only open 5 days out of the week, so if you miss it, then hey, you got another 5 days. So a lot of times it's consolidating, and if it does do a breakout, the breakout's not that impressive. So everything takes time, man. You guys have to be there. This is the psychology I always talk about. You have to be patient. Things don't happen overnight, and hey, that's what happens. Things don't happen overnight. You have to play the game, and to be honest, guys, a lot of people don't think it's fun because they have that get rich quick scheme mindset, and that's what always digs them to the dirt. Because It's funny too because I used to have that mindset too, and I humbled myself drastically because I understood that nothing in this game will happen fast overnight, and if it does, you just got lucky, and you're not gonna do every single time. But I tell you what, you could hit consistent every time if you take your time, be patient, learn from others, diversify, and just find something that works with your schedule, your lifestyle, and it'll work for you. So, anyways, like I said, excuse me. Like I said, I'm looking for a buy position, like now. Actually, now. So I'll tell you guys that I'm probably gonna buy on Friday. So I don't know how the market's gonna be on Friday. It might break past that zone or might even get a bit lower. Either way, I'm fine. I'm not even stressing it. I don't think it's gonna change that much, but we have to see what it do, right? So, anyways, let's talk about some news. So this one's gonna be titled Powell tells Congress rates will likely be higher than previously anticipated, and honestly, that is not surprising to me. The main reason why you guys could get mad at me, I don't care. The main reason why the rate interest rates will continue to go up until things is come back stabilized, is because things aren't stabilized. Things are still where they are when they were back at last year or the year before then in COVID. So it needs to be at its level. And guess what? People are still buying and selling. People are still borrowing. The money's still circulating. Hey, so rates are gonna get higher. And guess what? It is what it is. Right? There's nothing we could do as people, but we gotta. Hopefully, Jerome will put his feet down. Right? So let's read. The Federal Reserve Chair Jerome Powell told lawmakers on Tuesday interest rates are likely to be more than previously anticipated as the central bank works to bring down inflation, which remains stubbornly above the central bank 2% target. Where we're at then? 5? I think we're at 7 actually. That's my check. I might be wrong. But we're definitely almost certainly in that range. So it says the U.S. stocks were trading lower Tuesday, as some analysis said the comments were more hawkish than expected. Near 2:12 p.m. Eastern Time, the benchmark S&P was near session lows, falling 1.5 from Dow Jones off to 1.7. Nasdaq as well, right? The largest economic data have. Let's just yeah, all right, perfect. The large economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated, which is what I called months ago. Powell told the Senate Banking Committee to prepare remarks if the totality of the data were to indicate that faster tightening is warranted. We would be prepared to increase the pace of rate. And you've got, man, you see, I get so passionate because I remember watching a video at work, and I think I talked about this probably the last video I did before I was on my vacation thing, hiatus. He did not seem confident. And so what he was saying, even when he answered the questions, he didn't really seem confident. And I'll tell you why. The reason why he kind of said it may stay at a, it may level out. And what I mean by level out, like go in a straight line, so the interest rate won't change. And if it does, it's probably going to increase by a couple of percentage points, whatever, right? But guess what? It's going to be higher than it's anticipated. That's what I'm saying. They knew prior to this. They already said to themselves, guys, just to ease out the fear, the uncertainty. We're gonna keep it at a decent level. We're gonna calm people down. Hopefully this will soothe things out. And guess what? Hey, we're gonna bump it more. Although inflation has been moderating in the recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Right. Powell added. The latest consumer price index reports last month showed prices rose 6.4 over prior January as a slowdown from last summer's peak inflation of 9.1, but well above the 2% Fed rate target. So yeah, I mean, this is what we already know. Again, nothing really new to me, to be honest with you guys. It might be new to you guys because it's all relative. It really is. Powell comments spurred traders to price in a higher chance of a .5 hike than a 2.5. Yeah, it might even give you a full percent, honestly. Increased later this month, according to data from the CME Group. And a note by Morgan Stanley's chief U.S. economic Alan Sentier said Powell's remarks opened the door to a return to a .5 hike percent. If incoming data flow warrants it, if there are upside surprises in the job reports this Friday from the Labor Department that could have a dive faster and longer tiny second according to Zentier's notes. Interesting to talking point because from my experience, and this is anecdotal evidence, I've seen a lot of places that have been having the non-hiring or job opening or seeking employment kind of outside the walls, and this is actually really good as far as economy wise, right? So the Fed projected at its December policy meeting, interest rates would be raised at a range of 5 to 25% this year. So that's a lot. That's a big rate hike, man. That's a lot. Powell's comments now suggest rates will need to eventually rise above this level. So they're going way above that too, huh? This is the central bank's interest rate stands in the range of right. So yeah, as you can see, guys, this is a very nice chart. I love it. So this kind of gives out the interest rates of lending from the feds. So when banks borrow money from the feds, this is the rate they charge, which ultimately the banks upcharge us, which will also affect the bottom line. This is why banks are very competitive when it comes to lending out money, right? So I just want to really let you guys take a look at these recent two peaks, right? So the recent peak is probably the most aggressive peak that we have now, is the one that we're doing right now. So this has the highest jump in my opinion, from 0.5 to almost 5% 1 year, right? And other years just kind of kept at the same rate for increases. Back in 2018, kind of choppy. 2008, already know about that, with the whole crash and whatnot with the real estate and housing market. So I'm gonna read this last part of the article, and then we can wrap things up. Keep it a short video, right? Some Senate Democrats challenged Powell during Tuesday's hearing, cautioning that his rate hikes could lead to job losses, which I doubt, in hindsight, in my opinion. The Senate Banking Chair Sherrod Brown said there are other ways to bring down pricing, citing the strengthening of supply chains, boosting of the U.S. manufacturing, and rebuilding infrastructure. So I would have to the only thing I could really agree is the infrastructure part, right? And infrastructure is very important as far as the way how we live our lives. So if you're rebuilding, I wouldn't rebuild, I just enhance it. Now, as far as the strength of supply chains, negative, because again, that's requiring more money to be spent, which requires more money, which requires more circulation, which because if you think about it, what she's thinking about is supply and demand, which it takes price. So in order to bring down the demand or bring down price, you got to increase supply or increase the profits, or not profits, the product. And the downside to that is, depending on what industry you're in, such as let's say you're doing fruits, during the times of bad season, this tightening of the supply chain will not help you. So you got to get from the rock bottom, which is my opinion is what they're doing right now at the Fed market, right? They're just attacking the money itself by making it more, harder for you to spend it. So Democratic Senator Elizabeth Warren said if the central bank raises rates as much as planned, excluding any further rates, has now above the level unemployment would raise to 4.6, and she said it would cost 2 million people jobs. I mean, right. So as far as it costs people jobs, that could definitely 100%, no doubt, without a thought about it. Yes, it could cost a lot of people jobs, but Guess what? If it did cost the jobs, though, those who are not meant to work will not work. Those who are meant to work will work, right? And those who are not able to work will not be able to spend money, will not be able to circulate the supply of currency around, which being they won't be able to purchase different things. And when they're not able to purchase different things, retailers, the vendors or people who are selling goods and services have to bring down the price because there are not that many people out shopping, spending money. So if there's not that many out people shopping out, spending money because things are too expensive, thus then the price of those things that cost money have to go down. So those who are still able to shop and spend money, who are very frugal and smart with their money, will shop there because things are getting back to normal pricing. And as these things are going back to normal pricing, more people are going to spend money, people get hired, price is going to most likely stay the same, and the supply chain will be active. So again, I should run for the... Yo, hire me, man. Hire me. Yo, I should just run for this whole thing. Because I already got the game plan. Anyways, yo, this was a great show. Again, I feel amazing to be back. Doing this again. This is already 22 minutes or so. But yeah, guys, we're gonna keep doing this every single week. Support the channel so I can continue to upgrade this soon to be studio. And yeah, I'll catch you guys next week. Peace.